The RBA lifts interest rates by 0.5% as expected, but talks of further interest rate increases. Just how high will they go? Australia's second quarter GDP is out today, but does anyone care? And lithium stocks are on a tear, but can they go higher? I'm Paul Rickard and I'm mad about money. No Peter Switzer today again, but just me. So let's start with the Reserve Bank, 0.5% increase to 2.35% as expected. I think the interesting point about the statement was they stopped using the word normal rates or normalcy. So it suggests that perhaps rates have got back to a normal level. They did warn of future rate increases. So the market's left wondering just how high will the RBA take interest rates. I'm betting that they're going to have 3 more increases this year of 0.25%. So by the end of the year, we're going to be close to just over 3%, about 3.1%. There's some in the market thinking that the October increase will be 0.5%. We're going to wait and see. But I think the words from the RBA yesterday perhaps suggested a slightly more nuanced approach. In other words, they're going to be data dependent. A bit of follow the leader with the US Fed, but certainly looking at the impact of just how the increases have been felt by the community. And certainly the political pressure is starting to build on the RBA, a few comments from the Prime Minister and others. So it's going to be a little bit harder here on in, but I think we're going to see a little more RBA, a bit of still keeping the focus on rates going up, but being just a little more careful and looking at the numbers before they move. Anyhow, we'll find out in 4 weeks' time whether it's 0.25% or 0.5%. Okay, Australia's second quarter GDP. Yes, that's economic growth. That's out today, but there's almost been zero commentary about it. Markets expecting about between 0.7% and 1% for the quarter, taking the annual rate up to about 3.2, 3.5%. Not really a lot of commentary. Some good, again, boosted by domestic consumption. Net exports, we're running a huge current account surplus, should help. Probably the risk is to the upside. I guess if that's higher than expected, then maybe that might encourage the RBA to go 0.5% in September. If it was a really bad number, they might have to go a little bit lower. But I think it's almost sort of in the category that the market's a bit of a yawn. So let's see 11:30 today. Now, what is happening in the market as we look at the US, we're seeing bond rates up there high. That's probably the biggest negative coming out of the States. CPI next week, that's their August CPI on Tuesday their time, Wednesday our time. That's going to be really important. So they're going through the same sort of debate, just how hard will the Federal Reserve take it? And certainly since the meeting in Jackson Hole a week and a half back, the talking and the thinking has shifted to the Fed Reserve staying pretty hard. Interest rates are going to be higher for longer, and that's put a damper on the equities markets. And it's unlikely that sentiment's going to turn around in the short term. So a bit of a negative coming out of the US as they debate whether what we saw in June was really the bottom of the market and the July-August was just sort of a summer bounce, or we're going to see a retest of those lows. So certainly a bit of a tough couple of weeks ahead in the market. I think next Tuesday with the US CPI is really important. Now, one part of our market that is doing well are lithium stocks. Yesterday we hit Pilbara Minerals, hit an all-time high of $3.97. This stock in June got down to just over $2, so almost a 100% increase over the last 2 months. We also saw Allchem back over $14. Macquarie's got a target price of $21. A lot of their commentary seems to have driven, in part, the recent rally in lithium stocks. My warning on lithium stocks is, yes, I want to own lithium, but you have to be careful because we know markets overhype. And one thing we see in commodity markets, time in, time out, is when the price goes through the roof, suddenly over time supply will meet that excess demand. Everyone can see the demand coming. There's no shortage of forecasts talking about demand being caused by the EV revolution, but just bear in mind they will find supply. So I think lithium's a buy and pullbacks. I think you've got to be a bit careful at these levels, but certainly it's the one part of the market that seems to have the momentum at the moment. That's it for this week. I'm Paul Rickard and I'm mad about money.